a good set of results. You were able to also declare the special dividend on the back maybe of an outlook for the second half that might look better than the first. Tell us this, though. For investors, should they expect more returns from the company of this sort?
Well, we actually paid an interim dividend, which was a 65% payout of first half profits, and we did declare a special dividend as well. But our range of dividend payout ratio, our guidance is a range of 50 to 80%, and we've reaffirmed that range. So we'll look at the second half performance when it comes time to declare the final dividend and make a determination. But as I said, that interim really was actually in the middle of that range at 65%, and we did supplement that with a special dividend.
Just taking a look at the iron ore price, of course, this is your bread and butter here. We've got this rally, and it's unfortunate that it's down to that Vale disaster. But how are you looking at pricing in the next few months and beyond?
Well, I think importantly when it comes to pricing, actually before the tragic event in Brazil in January, we'd actually already started to see a narrowing of the spread in prices between the high iron content ores and the lower iron content ores. You might recall about a year ago there was this very wide spread in pricing, and we'd seen actually towards the end of last calendar year that steel mill profitability in China had actually started to moderate, and as a result we were seeing the narrowing of those price spreads. So we'd already seen that, and you can see that in our first half results. We saw an average realised price of $47 per dry metric tonne, and that was up on the previous half at $40. So we were already seeing those trends emerge, and obviously what we've seen post that as I said, tragic event is that iron ore prices have strengthened since then. Look, we don't really focus on the outlook for iron ore prices. It's hard to predict. What we do focus, though, is delivering on our strategy, getting our tonnes there, being the lowest cost producer and actually optimising our margins. And we certainly saw that come through in this half results. We saw a 24% increase in our underlying EBITDA per dry metric tonne. That was up to $21 per tonne, and we saw some really strong improvement in our results overall.
That brings to mind your high-grade Iron Bridge project, because that higher grade material is actually seen as perhaps having the most impact from what's been happening, or what happened, the tragic incident over in Brazil. You'd previously said that there would be a decision on that project at the end of last year. What's the delay, and are we talking about what other factors are you considering as far as that's concerned, financing, what have you?
I think on Iron Bridge there's been a lot of work done to demonstrate that we can produce a high-grade magnetite product, and that's a 67% Fe product, so very high grade. We're in active discussions with our joint venture partners, so it's a very active assessment at the moment. Difficult to put exact dates on that because this is a big decision, but we've certainly done a lot of work to de-risk the project. We've produced a product, and now we're in those active discussions with our joint venture partners.
Elizabeth, let's talk a little bit about what's happening in China and the slowdown there. Do you have any material impact on your business as a result of that? Are you seeing any slowdown in terms of exports?
No, look, we're certainly not seeing a slowdown in China. And look, just recently, China released its official statistics for crude steel production for last calendar year, and that was actually up 12% to 928 million tonnes of crude steel produced in China last year, and that was a record year of crude steel production. We've seen those trends continue, and that's driving strong demand for seaborne iron ore. And let's not forget that the Chinese government is still significantly investing in infrastructure, whether that's rail or airports. There is significant investment continuing. That's driving demand for steel, and that's driving demand for iron ore. So we're certainly not seeing a slowdown in demand for seaborne iron ore.
The question is what's ahead. Based on your conversations with your customers there in China, as a follow-up to Rish's point here, is there a sense that these settings, these encouraging settings will continue for the business?
Look, I think there's obviously speculation in the market about the impact on supply as a result of the tragic tailings event disaster in Brazil. So there's a lot of different views about the impact on supply, whether that's 40 million tonnes or 70 million tonnes. So certainly I think that's still yet to play through. We've just come out of Chinese New Year. We're coming out of that winter production period. We're going into what will be peak steel production. And I think once we get a better indication on the impact of supply, then that will really indicate those conditions. But from what we're seeing so far, that steel production is continuing at those elevated levels. I'm not sure it'll grow 12% again this year, but we certainly see very continuing strong market for iron ore and for seaborne iron ore.
Now, in case that gap does open up, that opportunity open up as well, we heard from BHP yesterday, we were speaking with them, we heard from them, and they basically said they don't have any spare capacity, or a lot of spare capacity to up their production. As far as you are concerned, do you have any spare capacity in terms of that, you being able to ramp that up?
Well, we've already indicated that we expect to ship more tonnes in this second half of our financial year. And we've given guidance in a range of 165 to 173 million tonnes. So we'll be working very hard to optimise the capacity we have through our existing operations. But that really is on the back of it. We've already indicated that, that the second half will be higher. I think most of us will be looking at opportunities for maybe some incremental tonnes into the market. But sitting here today, we don't have the capacity currently for a material increase in supply to the market in the short term.
Elizabeth, I just want to turn to the business and the shape of Fortescue right now. Are you happy with it? Are you happy with the size of the company, for instance? Do you foresee growing organically only, or do you see bolt-on acquisitions, or indeed a spate of consolidation in the industry as a whole, and would you be part of it?
Well, certainly we're very happy with Fortescue and the shape that we're in. Our balance sheet's never been in better shape. We've just seen this record payout to shareholders for interim results. So we're in fantastic shape. We always want to do more in terms of our safety performance, so that's a key focus for us. I think in the context of further growth, we are looking at opportunities already in South America through exploration activities both in Argentina and in Ecuador, and those targets are prospective for copper gold. So we do have some sites and some opportunities for growth, but that's really in a low-cost exploration style approach. When it comes to broader M&A opportunities, we would never say never, but we tend to be more focused on those exploration opportunities because we know that that's a very good way to unlock growth and significant growth opportunities, but at a lower cost of entry. And we're very focused on our core iron ore business. We're investing in the Eliwana mine and rail project. That's a big investment for us. And we talked earlier about the opportunity for Iron Bridge as well.
Right. So as that pertains, I guess, then to CapEx, are you still keeping the CapEx target for the year, 1.2 billion, if I'm not mistaken, full year?
That's right, 1.2 billion, and we were at 530 million for the half, so we're well on track for that full-year guidance of 1.2 billion. And that includes sustaining capital, and it also includes the Eliwana mine and rail project. So that's a project out to the Western Hub. It's a 30 million tonne processing facility and 143 kilometres of rail. And it's very important for the ongoing delivery of our West Pilbara Fines product that we just released in December. And that's a 60.1% Fe grade product. We had our initial shipments in December, and we're obviously shipping now, and we expect to ship between 8 to 10 million tonnes this financial year. But once Eliwana is up and running, we'll be shipping at an annualised rate of 40 million tonnes of West Pilbara Fines. So that's an important part of our integrated operations and marketing strategy.
Elizabeth, you said on a media call just a short while ago, apparently, that you don't have the capacity at the moment to boost volumes in the near term. Tell us why and when you will be.
Well, what I said actually was we didn't have the capacity to boost materially in the near term. So we have our ore processing facilities, so we don't tend to have bottlenecks in our rail and our port operations, so we can increase capacity through there. The bottlenecks tends to be through our ore processing facilities. We beneficiate around 80% of our iron ores through those OPFs, and so we're looking at ways that we can optimise that. But in the near term, we don't have the opportunity to materially increase production, but as I mentioned before, we've got the Eliwana mine and rail project, an opportunity, we've yet to make a decision, but an opportunity with Iron Bridge. So we're certainly looking at opportunities to increase capacity over the longer term.